What's going on, guys? Philip at Trade Genius. All right, we have a weekly chart of Bitcoin going back to the 2010s. And as you can see with this indicator, it does a pretty good job of telling us when the Bitcoin tops are in. So we're going to talk about this indicator. I'm going to show you how to get it, how to use it, what's behind it, and how it works on other things too, like gold. So let's dive into this video and check this out.
Trade Genius.
All right, guys, really quickly before we dive into this video, we have our specials running. If you get special number one, $3.99, that's 12 months, guys. That's with us in the room. Setups are every single day and a lot of information. There are a lot of tips and tricks, training. You can ask questions. We're there all day. Very good value for your money there. And of course, we have our other specials if you're interested in training or other bundles or our Signal software. So check that out at tradelikeagenius.com. All right, so this indicator is called the beam indicator. And there's two indicators that actually come with this. There's the beam bands, that's actually meant to be on the price chart. And then there's the beam indicator, which this is derived from, kind of an oscillator like you would have with other things like RSI and stuff like that. But the calculation is a little different outside the box. So we're going to talk about what this is. Now, first thing we should do is look at how it's constructed or what the logic is behind the formula. So bitcoineconomics.io, they're the ones behind this indicator. Again, this is freely available on TradingView. BEAM stands for Bitcoin Economics Adaptive Multiple. Okay, so they've messed around with different formulas and averages. They came up with, this is the formula, okay, for you math geeks out there. And basically what this does is it's a moving average that's 200 weeks or 1400 days, because this is the average cycle length of Bitcoin. Now, Bitcoin's unique because of the halving cycles, and that typically drives these cyclical tops and bottoms. Asset divisor is part of the equation, which makes sure that the beam values are roughly within a 0 to 1.0 range. Negative as well as values above 1.0 are possible, though, and you'll see that. So that's a indicator setting that's specific to what you're charting. All right, so Bitcoin works well with 2.5. Other assets will work with different, not only different lengths in days, and also different asset divisors. So that's a tweak that you can make. A beam value near zero or below indicates that Bitcoin or another asset is underpriced or oversold, and means that buying might be a good idea. A value near 1.0 or above means that the asset is overpriced or overbought, and selling is recommended. So that's basically this. If you're up over 1 in that area, time to get out, as you can see up here. And then likewise down here, oversold, good areas to accumulate here and here. Okay, so simple stuff like other oscillators that we have. Now there's another component to this. It's the beam zones. So the beam zones are these shaded areas. Obviously green means buy, red means sell. Gray is interesting. It's not really a value of the indicator. It's more of a time-based thing around the halving cycle. So the green zone is a beam reading of equal to or under 0.07. Red is equal to or greater than 0.96. And that gray zone is 240 days before the halving and 240 days after the halving. Okay, so halving is right in the middle of those gray zones. And typically the reason why they highlight that is because in that zone, it may look like you're having a pullback or you might be entering into a bear market, but you are reminded that that is actually the time where price is to be bought on dips, similar to what we have now. And we'll look at that a little bit later. So the beam bands, which is the upper one that we showed you on the price chart, that's this guy up here. That's calculated in a similar way. So there's a formula again for you math geeks. So the upper beam line is the same formula, but it's multiplied by the exponential asset divisor, which is 2.5. So you get a multiple of 12, okay, and that gives you that upper line. So that formula does a pretty good job of the way the Bitcoin cycles of marking those tops. So that being said, now that you kind of understand how that works, if we look at this now, this is the entirety of the Bitcoin chart as you will see it on TradingView using BLX, Brave New Coin Liquid Index for Bitcoin. Okay, that allows you to go back the farthest back in time that you can, back in mid 2010 approximately, all the way out to current. And this is an end of day chart, so it updates at the end of the day. But you'll notice that this setting here of, if you look in the indicator, the cycle length 1400, asset divisor 2.5, and your buyer sell threshold is going to be set here. But this does a really good job. Okay, so now we're in this zone that pre-halving zone where most people, if you're taking this out of context, just looking at price, you're thinking we're entering into a bear market or we're still in a bear market. But if you've noticed on previous cycles that when you're down in this area, even though you still haven't made any new highs from the previous peak, okay, still, you could argue that we're in a bear market. That's just usually not the case. And it's because of that disinflationary mechanism at the halving point. And again, if we look at the beam indicator, again, when you start going down into these zones, these pullback zones into the gray areas, and I would even further add that if you take the 0.15 level when you're in the gray zone, which is what we're at now, that is a good spot historically to buy when you get your move out of the bear market going into the halving, buy any pullbacks to that 0.15, and that's what we have now. So any readings, any price levels below the 0.15 reading of the beam indicator would be a deal going into the halving, and that's where we are now. So this does a really good job of keeping things in proper context in relation to price. And I think what we're seeing here, a price action on Bitcoin toward the bottom, is indicative of people, it's finding a floor. We're getting some decent buy waves in here at these levels as it's probing low 7s to high 6s. And I think that makes sense with what we're seeing here. I will leave you with this, and this is the multiplier, the Fib multiplier based on the 50-period weekly moving average. And I actually added to this some levels below because, even though we lose in the bear market, we lose these levels, it's nice to see the Fib multiples as they're hit on the way down in bear markets and pullbacks. And like I said before, on a bear market, this one was unusual because of such a strong rally out of the bear market. That hasn't happened before. Now you could blame that on the plus token Ponzi gobbling up a lot of Bitcoins and then dumping all those Bitcoins to kind of pervert that cycle and throw it out of what was a normal cyclical price action. But you'll notice that gives us this next level down here, which would be once the 50 period is broken, it's almost like we had a mini cycle like we did post-halving top cycle, almost a mini one of those. So you have to keep an eye on this level. This is the negative 236 level, okay? And that can be a target if there's another thrust down here. So that would be 59.92. I think keep an eye on that level. If that level gets tapped, I would highly suspect price rebounds strongly off that level. Now, this could be the bottom here, guys, because again, we're running out of time toward the halving. Usually price does not mess around to the downside for much longer as we get closer to this date. And more likely this stabilizes and starts to grind up with a major grind higher after the halving. So there you have it, the beam indicator, guys. I think it does a real good job of putting things into context. Keep this in your arsenal. Compared to other things like gold, you'll notice that it's not as clean, and I think it's really more an indicator tuned to how the Bitcoin price cycles are because of the halving. No other commodity has that disinflationary mechanism that's at a set point in time every 4 years or so. So that changes the way these things work. But this does work on other things, as you can see, does let you know when things are getting overheated in a pullback. I do think Bitcoin is, we were looking at a 10-year span on the chart. This is a 10-year span roughly with the price. Actually, this would be a 10-year span here with the price of gold. And what I think might happen, the gold ETF was introduced right around here in 2000 in Australia first and then the US. And what happened was a multi-year bull market. And then you had these bands just going up and up and up. So the trick here is if we do enter this, that even though you might get a reading here on the top, that would not be, if we enter into this mode, which is entirely possible, most assets get into one of these modes, this reading would actually not be a top, and then you get an 80% pullback. Yes, it will cool off, but it stays within the bands. Where it gets tricky is if you fall out of the bands like you have here, you're not sure if that's the market rolling over because you did get an overbought reading, but then you see price recovers and actually starts to make new highs, which isn't confirmed till way back up here near where the previous overbought reading was. So that's where some people can get left out of a multi-year bull run market. Same thing happens up here, and then price starts to level off, and then you think, okay, we're consolidating with a triangle, and then price starts to break up. Great, but then it actually can't make any more new highs, starts breaking down these support levels, and then has a flush And that's usually your confirmation that the market run is over. And then you get a multi-year bear market. Now, keep in mind, most of these cycles, like with gold does things in 5 years where Bitcoin will do it in 1 year. So if you compared this market top structure to what we saw in 2018, this took 5 years for this bear market to shake out and finally come out of it, versus about 1 year of going down in price before it bottomed out with Bitcoin. So we could be looking at a 5-year run to the upside on Bitcoin, and that would probably take place after this 2020 halving. So interesting stuff, but I think it's good to have these longer term cyclical top indicators around in your arsenal, just to reference every once in a while, a few times a year, just to see where things are at. Thank the guys over at bitcoineconomics.io. Check out their site. They did a good job on this. So I hope that helps, guys. Freebie there. This one's a good one. Use it. I hope you like it. If you're interested with getting us into the room and doing all the various things that we do, binary options, crypto trading, ETFs, stocks, Forex, head over to tradelikeagenius.com. Check out those specials. Love to see you in the room. All right, guys, that's it for this video. Please take care. I will see you on the next one. Bye.
Trade Genius.